Welcome to Protect Your Assets Market Briefing. I'm your host, David Hollander, also known as the Sandman. Now let's get started. All right, the Dow, we had a good week with the market. Dow up 2.2, S&P up 1.9, Nasdaq up 2.3, and the international index up again 1% for the year, up almost 24%. Just big year. 10-year Treasury flat, but right there at 3.99%, so we broke that 4% level. And oil had a good week, up 7.5%, $61.44 a barrel. Since the October 2022 low, get this, the S&P 500 has gained 90%. And if you add dividends in there, we're looking at 98%. No doubt. It's been a great run. And the question came in this week a lot from several people. Will this market keep going? Is this an outlier in terms of strength or how long it seems it's been going on? So I took a look back over the last 80 years and the last 12 prior bull markets, if you exclude this one. Get this, they had an average gain of about 200%. And they lasted 5 years, with the biggest one 2009 to 2020, it was 11 years. So this bull market is neither a toddler nor a senior citizen. It's somewhere in the middle. And if we look at history for any context, it's always the fundamentals that are going to shape what comes next. And as the saying goes, bull markets don't die of old age. They end from recessions or Federal Reserve getting a little crazy. So this past week, we had the stocks overall forming what's called a capitulation-style bottom followed by a V-shaped recovery. So we saw, remember, in April, the down, and the market has been churning steadily higher. And this is what's known as a volatility crush for those of you out there who look at derivatives. You might want to, this is a new term for you today. It's called a vol crush. This occurs after a bout of a sudden and rapid rising implied volatility, like we saw the VIX in April peak. And why this happens is because traders rush into the stock market buying puts. These are options. That puts mean the market goes down, or they buy longer volatility positions to hedge their stock portfolios, regardless of price. But eventually, the cost of hedging, it gets so expensive they just stop doing it. It doesn't make any sense. So based on the moves that we're seeing, and we use these math derivatives from the recent price action in the S&P 500, to realize we closed yesterday at 67.92. So we've seen, a little over 6% decline from yesterday's close. Well, again, the Fed, if they meet on the 29th, is what I just said, and if they lower rates for stocks, that's good. And over the next 2 weeks, we're going to see 60% of those S&P 500 companies, including the following: Alphabet, Apple, Meta, Microsoft, NVIDIA, Tesla. They're all reporting earnings. And if those are positive or slightly positive, guess what? That upside could happen. But like I'm saying, there's a possible 6% plus pullback. That's just normal. That's healthy. And so if you see that throughout the rest of this year, then use that volatility to go ahead and look at your over allocation. You may want to do that right now and rebalance your portfolio. Look for opportunities. If it got overweighted, you might want to take some cash. Nothing wrong with cash. Cash is king, as they say.
You can hear the Protect Your Assets Market Briefing on your favorite podcast app or as an Alexa flash briefing. Just search for Protect Your Assets Market Briefing. Links to subscribe free wherever you listen are at libertygroupllc.com/PYA briefing. The following program is paid for by Liberty Group, and the views and opinions of the host do not represent those of the station or its ownership. Investment advisory services are offered through Liberty Wealth Management, an SEC-registered investment advisor. Legal information provided on the air is not intended to be a substitute for callers hiring their own lawyers to advise them about personal legal matters. The information provided is general financial comment and cannot be relied upon for your specific financial situation. Investing involves risks, including the risk of loss of your investment. Please consult with a financial professional before investing. California Life Agent number 0B48569. You're listening to the Protect Your Assets Radio Network.